Yo, what is going on, everybody? It is Tukey here. Welcome back to another video, a part of the Tukey Supply and Demand Bootcamp. Hope you guys are doing well. For today's video, this is definitely going to be one of the more juicy ones. I'm going to be going in depth and covering the overall trading strategy, trading setup that I trade with based off of supply and demand. Now, if you don't know who I am, if this is one of your first times seeing me, I've been trading since 2020 for 6 years now. I've been trading with supply and demand since 2022. So the past 4 years, I've really just been refining my trading system, using supply and demand as much as I can, and best educating myself in terms of understanding overall supply and demand within the markets and how we can best utilize supply and demand to actually make the right decisions on the charts. So let's go ahead, hop right on into this. It's going to be one solid example. Obviously, everything that I cover within this video will apply to demand zones as well as apply to supply zones. Okay, so let's go ahead, hop right on into it. Also, if you haven't watched some of the previous videos within the Supply and Demand Bootcamp, I highly recommend watching some of those videos first, especially if you're more beginner based getting into supply and demand, just so you can best understand why I'm drawing out specific zones, why I'm looking at certain confluences, etc. So definitely recommend checking out some of the previous videos before you dive into depth on this one. Like I said, I've been trading with supply and demand for the past 4 years. So within that 4-year span, I've really refined my system as much as possible to trade based off of what works for me and trade based off of what will ultimately give us those high volume, quick moves. So let's go ahead, hop right on into it. We're going to get a solid example here on NQ, and we're going to do a nice supply example. Like I said, everything I mentioned within this supply example will also apply to a demand example as well. Now, we first want to start out on the 30-minute time frame. Like I said, we're going to be doing a supply example. Therefore, first, you want to be marking out a 30-minute supply zone. Okay? So as we can see right here, strong high being created. Right here at these highs, strong high being created, then led to an aggressive move to the downside here on the 30-minute, obviously indicating an excessive amount of selling being inputted at this price range. Okay, keep in mind, supply and demand zones are essentially just price ranges where we previously had an excessive amount of buying pressure or selling pressure being inputted. Obviously, the more buying pressure we have, the bigger price will be moving to the upside. The more selling pressure we have, the stronger and more price will be moving to the downside. So boom, let's go ahead and create this 30-minute supply. So once we create that 30-minute supply, we want to extend it all the way out. Now, this is one of the more important things that you want to look for next. So once you draw out your supply zone, you then want to look for some sort of bearish gap that matches within your specific supply zone. Now that can be this is a supply zone, therefore we want to be looking for a bearish gap. If we were trading with a demand, we would then want a bullish gap. In this case scenario, since we're trading off of a supply zone, this selling zone, we would want to look for some sort of bearish gap, okay? Like I said, it can either be on the 30-minute, the 15-minute, or the 5-minute. Ideally, you want it to be on the 15 and 30-minute, just so you can ultimately get that extra confirmation on the higher time frames, okay? Now, in this case scenario, we actually see right here, we have a bearish 30-minute gap. So let's go ahead, mark that in. Keep in mind, you want the gap to ideally be matched within your specific zone. So in this case scenario, you can see this gap is essentially inside of the supply zone, the 30-minute supply zone that we had drawn out together. Now we extend that all the way out. Now, another thing that you want to look for as well, let's narrow it down for the 15. You at least want to match your supply zone across 2 different time frames. The more matches, the better, ideally, right? But you at least want it to match across 2 different time frames, okay? So we can see here on the 15 minute, we were just on the 30, but on the 15 minute, we had the same thing here. Strong high being created, then led to an aggressive push to the downside, obviously indicating excessive amounts of selling being inputted here. Now, another thing that we see here on the 15 minute, we see a bearish gap on the 15 minute mixed within our supply, right? Let's also, so there is the 15-minute bearish gap we just drew out. But before I draw that out, I want to match the 15-minute supply zone with the 30-minute. So boom, we mark out the candle that started that move. Now we have a 15-minute supply matched with a 30-minute supply. You can already start to see it form and start to see this setup look pretty good. Now, like I said, we had that bearish 15-minute gap. Ideally, this gap, you want it to be as matched in as possible to your specific zone. So for example, let's go ahead and draw out this gap right here. Let me see this wick. Okay, cool. So let's just go ahead and delete this 30-minute gap for now and draw it on the 15, because drawing it on the 15 matches this gap in within the zone more than the 30-minute, and that's what you want to look for. As you can see, the 15-minute is more inside of the supply zone, which is ideally what we want to see. Okay, the fact that we still have that bearish 30-minute gap though still even gives us extra confirmation. It just tells us that within this whole price range here, this area here, it's just a ton of built up selling pressure that market makers are going to want to look to utilize to then push price lower once we do retrace back to that point. Now boom, we have that 15-minute gap. I'm going to change the color of the 15-minute gap to red just so you guys can get a better understanding of what is supply and what is our gap. Now perfect. So now that we have our zone matched across multiple different time frames, we have a key level, which is our bearish 15-minute gap inside of our supply zone. We now have confluences stacked on top of each other, okay? So now we're on the 15. If you even want to get that extra confirmation, go to the 5 and then match that 5-minute zone inside of the 15 and 30-minute zone if possible, okay? Like I said in previous videos, the more you can match your zone across multiple different time frames, the more confirmation you actually have within that specific zone. Now beautiful, same thing, pretty much looks almost identical. You have strong high being created right here, then led to an aggressive push to the downside, okay? So let's go ahead, mark it here. So we have 3 supply zones matched within each other across multiple different time frames, and we have multiple different key levels stacked within our supply zone, specifically this 15-minute bearish gap, okay? Specifically that 15-minute bearish gap. Now we want to look to utilize that 15-minute bearish gap as more of our entry point, okay? We have our supply zone as the price range where we anticipate to get that reversal. But to really get that precise entry point, we mainly want to look to utilize that bearish 15-minute gap. Let me change this to blue so you guys know that the red zone is the only gap that we have here. Okay, perfect. So now that we're on the 5-minute, we now want to wait for a retracement back into this zone. We have our confluences stacked on top of each other. We have our key level inside of our supply zone. We now want to wait for a retracement back into this zone. Now, as you can see here, at this point, we can then start to narrow it down to the 1 minute, or we can stay on the 5-minute. But let's say, for example, we are on the 1 minute. We come down to this zone here. We start to get a better, oh wait, that's not the one. That is not the one. Where'd it go? It's hiding from us, guys. It's hiding from us. Okay, it's right here. Okay, so 39.72. Okay, so let's go back to the 1 minute. So that's 39.72 level. So let's go back a little bit, and it should match up here. Looks like it's not. It's being weird. Okay, we can stay on the 5. Now, like I said, we want to look for a retracement into that zone. Okay, we want to look for a retracement into that zone. We want to start to see price hold inside of that zone very, very well. Holding inside of that zone essentially just meaning we're not breaking above, we're not pushing above and invalidating that zone higher. We're holding inside and starting to show signs of selling pressure, starting to show signs of bearish candles, bearish wicks, etc. That's where you can start to narrow it down to the 5 minute, to the 1 minute, like how we are now, to start to understand what are the candles doing more on the short term time frame. Okay, so once you start to see selling pressure start to step in, you start to see those selling candles and selling wicks start to be inputted within that zone and hold within that zone. Like I said, holding inside of that zone just means we're continuing to trade inside of it while still not breaking above. Think of your supply zones and your demand zones as an overall barrier, okay? And just like a barrier in real life, in order to break through that barrier, you need an extended amount of pressure, of force, right? Just like our supply zone. In order for price to break this supply zone and continue further, we would need an extended amount of buying strength, right? Of buying momentum. Obviously, that wasn't the case here. You can see price holds inside of that zone very, very well. We fail to break above that zone, indicating sellers are starting to take control here, right? Sellers are starting to step in. We start to get signs of bearish momentum within the candles that we are looking at. And most importantly, you can also see that 15-minute bearish gap that we had marked out, which is this red zone. We've also failed to break above an inverse. You can see it's still holding that gap very, very well. Didn't close above, didn't break above, still holding it well. Okay, now in terms of our stop loss, one of the really good things about supply and demand is my stop loss is almost always in the same spot. And that's either if I'm trading with supply, it's going to be an invalidation above our supply. If I'm trading with demand, it's going to be an invalidation below demand. Okay, so I'm just essentially putting my stop loss at an invalidation of that level, because if we do invalidate it, it helps me identify, okay, this zone isn't a confirmed area anymore where those buyers or sellers were likely to step in. Okay, now for our stop loss, let's go ahead and place this trade as if we were going to take it. Now another thing that you can do is the low of the supply or the low of the key level, which in this case is the 15-minute bearish gap. You want to mark out that low. You want to mark out that low, meaning right here, since we have this bearish 15-minute gap, which is the red zone, you want to mark out the bottom of that red zone. Okay, you want to mark out the bottom of that red zone. So let's go ahead and just put a horizontal line right here, and we can see this black line here. Now you can also utilize that breakthrough of that low of the key level as an entry point, as a confluence. You can enter a bit earlier still, but if you do want to wait for additional confirmation, that is another solid confluence, another solid confirmation you can use in terms of understanding, okay, are these sellers, are these buyers actually going to step in, and are they actually going to step in heavier than usual? Because you don't want to just enter and get faked out, right? So we have multiple different confluences stacked on top of each other. Let's just say we were to enter at a breakthrough of that low from where this key level was created. Okay, we'd put our entry right here. Our stop loss, like I said, is an invalidation above our zone, so right here. So you can see risk is very, very minimal. Now in terms of my take profits, I am majority of the time, if not all of the time, utilizing some sort of key level as my take profit. Okay, so in this case scenario, we can see right here, we pretty much have almost equal lows created, but we have like a strong lows being created, aka a support level being created right here. So at this point, we can utilize this low as either our break-even point, our partials point, TP, whatever it may be. I know everyone's different in terms of how they approach their trades, but you at least want some point on the charts to either lock in a break-even or lock in a trim. And the reason that we're using a key level is because, let's say for example, price taps this key level, and this is our take profit. We hypothetically, obviously, we see that it breaks through, but let's say it didn't broke through and it reversed back to the upside. If we tapped this low, we would then take profits on this position and move our stop to break even. Okay? Once we took profits here, let's say it reversed back to the upside and hits our break even. That will still be a green trade due to the fact that we took profits at that low. Therefore, that's why placing your take profit levels or exit levels at some sort of key level is going to be super ideal. Okay, you always want to make sure that you have your key levels identified and placed on the charts, because they simply just help you understand where is price likely to reverse, not where is price going to reverse. No one can fully predict the market, right? Unless it's like the market movers or some shit. But like, as the retail traders that we are, we want to just get the best confirmation possible. And in this case scenario, that's why I would be targeting this key level. Now, this would be our first take profit, right? Let's say we're taking 50% off here. Then the next take profit I would look to utilize is the next key level or next previous key level that we can look to target, or the next key level that is likely to provide price with some sort of reversal. Now in this case scenario, what do we see here? We see a strong low being created on the 5-minute, then led to an aggressive push up. Okay, let's go ahead and mark out that low of that 5-minute. Go ahead and mark out that demand on the 5-minute. We can go ahead and extend it all the way out. Now, boom. You can even see price is starting to hesitate at this 5-minute demand and starting to provide us with a bit of a reversal. So that's why placing your exit points or take profit points at key levels are very, very important, because you're able to get the most out of the trade. You're able to exit the trade and get as much profits as possible before price does reverse on you, obviously, if it does. If it doesn't, by all means, beautiful, right? Like, we're going to continue to rip. But obviously, market's never moving in one direction. We want to be sure to manage our position to the best of our ability. Therefore, that's why we want to be looking to put our exit points, our take profit points at a key level. In this case scenario, it's literally demand. So we had price tap into supply, targeting this demand down here. So literally all the way from supply printing down to demand. Okay, so let's say we were to play this out, put it on replay mode. Boom. Entry point would be right here at a break below this low. Stop loss is an invalidation above these highs. First TP is right here at this low. We can go ahead and mark it out. Second TP is down here at this low. We can go ahead and mark it out. Now, boom. Let's go ahead and watch this play out. Hold on, let me slow this down. Okay, boom. So let me go back to like 3 speed, okay? Or let's go to 1. Let's go to 1 just so we can slow it down, okay? Tap in, hold the zone very well, not breaking above, failing to break above the zone, starting to show really good signs of selling pressure, obviously. First TP hit. For me, once my first TP is hit, I'm going break even. Okay, like, it's just a no-brainer. I'm going break even, or in certain cases, I'm even trailing my stop to profits. Now we can see first TP got hit. Selling pressure is looking very, very good. We have our second TP down here at the next possible reversal point, which is this 5-minute demand. Let it play out. Selling pressure still looking very, very good. And then boom, full TP pretty much hit. Now we should even tap back into this again. As you can see right now. Almost. There we go. Right there. So boom. Full TP would have been hit. We still hit it right here, but still we tap back into it. Once again, selling pressure looking really good. Although now we understand that we're now in a 5-minute demand. So right here, we obviously take our main profits on this position, close all out, or we can leave runners here in case this does want to continue lower. Obviously, if we were to just leave runners, it wouldn't affect our position much, regardless of if it were to reverse. So let's say hypothetically, we were to leave runners and we were to trail our stop to right here above this high. So let's say here is our first TP, we took off 50%. Here is our second TP, we took off 40%. So let's say hypothetically, we have 10% of our position left. We leave those runners to run. We obviously know this is not going to continue lower, but I just want to show you guys how we can best manage this position. Okay, so letting it play out. Let's put it on 3 times speed. And those runners are kind of just doing their thing at that point. Looks like we tap back into that 5-minute demand again. So the fact that we tapped back into it again and price provided us with that second reversal just starts to confirm that buyers are starting to step in at this level rather than selling, because we failed to break below this 5-minute demand, indicating that this buying level is starting to be valid, right? This buying level is starting to present us with high amounts of demand, if anything, more demand than supply. And like I said in the previous video, think of it like a scale. The more demand than supply you have, the more price is going to be moving up. The more supply than demand you have, the more price is going to be moving down. Now, price did tap this high, which is where we were to exit our runners in this case scenario. If you were to hold runners, and then boom, it still would have been a solid, beautiful trade from there. So you can see we entered off of that 5, 15, and 30-minute supply zone. We matched our supply across multiple different time frames. We also matched a 15-minute gap. Also, there was a 30-minute gap inside of our supply, right? We held inside of this supply zone very, very well, failed to break above it, indicating sellers are starting to be present and starting to be in control within this zone. So we essentially just have confluences on confluences on confluences stacked. We broke below that low point, which I mentioned, the low point of that 15-minute gap. And you can see right when we broke below that low point of the 15-minute gap, that puppy literally just printed it to the floor. You know what I mean? So beautiful trade, beautiful execution. And like you see here as well, risk is very, very minimal. That's one of like the beautiful things about it, is you don't have to risk so heavy. Obviously, like I mentioned earlier as well, same principles, same confluences would apply to trading with a demand zone. So that's going to be it for my trading setup, my trading strategy. I hope you guys are able to find some sauce and take pieces of my trading strategy, apply it to your guys's. Or if you don't even have a strategy for yourself right now, your current strategy isn't working, give this a shot. See how it works for you. See if you can even refine it yourself to make it best fit to you and how you are as a trader. But other than that, you guys, I hope you guys learned some new things, found some value from this. Go and catch some bangers. Much love, you guys. I'll see you in the next one.